Welcome to the Business Finance Bulletin, episode 179. Hi, welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, challenges facing small businesses, small business feedback on raising finance, and the importance of Keyman Insurance cover. When we're carrying out the key part of our business, which is raising finance for businesses, obviously we have a very long and detailed conversation with business owners about their business, and that tends to expand out to the wider economic environment. And we're beginning to see an element of doubt creeping into small business owners' mind about how the economy is currently playing out. This fear of a downturn has very much come out in a latest survey from Bibby Financial Services. It's part of their quarterly SME Confidence Tracker. The latest one for quarter 2/17 has revealed some interesting findings. First of all, the report highlights there's been a dramatic increase in the amount of money being written off as regards invoices which business owners feel are irrecoverable. Over the last quarter, they estimate that business owners are writing off debts worth £20,403. The thing is, that's a 70% increase on the same period last year. A very big difference. The second finding is about the appetite as regards investment plans. A year ago, businesses said they were planning to invest about £102,000. The latest figure has this coming down to £66,000. So again, a very significant drop in investment appetite. And of course, that's going to have a knock-on effect throughout the economy. What are the challenges they say business owners are facing? The number one challenge is the concern about winning new business. Who's going to be out there buying? Secondly, it's finding and keeping skilled staff. So clearly finding the right staff is becoming a challenge for business owners. And the third challenge, perhaps not surprisingly, is managing cash flow. So here I can see a number of things which are concerning business owners. What's the message out of this? Well, you really just got to sit down and plan ahead on a regular basis, making sure your cash flow is up to date, making sure you're continually to trace invoices in a timely manner. Of those businesses here in the UK are out there actively raising finance, what has been their experience in actually getting the money they've been asking for? Well, that's a question that's been raised by Hiscox Insurance as a part of a survey that they've undertaken amongst 500 small business owners. Now, the first thing that came out of this report, interestingly, is that despite over the last 5 or 6 years of the rise in crowdfunding platforms and an increasing use of asset-based finance such as asset finance, HP and invoice discounting, the survey found out that 3/4 of businesses said that they still went to the bank as their first port of call. Now, once they've got the money, 38% of them think that their core funding is actually coming from indirectly through European money. Now, of course, the concern is what's going to happen post-Brexit if nearly 40% of money is coming from European funds. Also, looking at options, 36% of business owners said that they didn't have any options. They think that the market was fairly closed. Now, I'm a bit confused by that because, as I said, over the last couple of years, there's been a plethora of options that are coming out. And it kind of leads me to believe that business owners are still defaulting, as we've discovered, 3/4 of them, to the bank. There are plenty of other options out there. All you have to do is just go and search on the internet and you will find a huge host of different providers out there. Or, of course, go and hunt out finance brokers like ourselves here at Business Loan Services. The options are out there. Also, interestingly, 28% of them said they couldn't get finance because they said they were not eligible. Now, what are the barriers there? Well, there's a couple of things that make business owners not eligible. First of all, startups. There are many finance providers out there not interested in supporting startups. Sectors. You may be in the wrong sector, a sector that lenders deem to be high risk and therefore they're moving away from them. Or it just could be that you haven't hit minimum turnover levels. Many finance providers now say they only want to deal with businesses of a certain turnover because anything small end, they just don't make the money on it. So you can see there an interesting set of challenges faced by business owners when it comes to raising finance. As I was saying, if you do have a plan that you wish to discuss to see what your finance options are, by all means, we're more than happy to have a chat. Just drop us a line, info@businessloanservices.co.uk, and we'll talk you through all the various finance options available to you. Have you heard the term Keyman Insurance? It's possible you may not have. So what is Keyman Insurance and why is it important when we're talking in this bulletin about finance? Well, Keyman Insurance is what it says. It's insuring the key man or the key person within your business. You think about it. Ask yourself the question, what would happen to my business if I wasn't here tomorrow? It's an interesting question, isn't it? Now, obviously, there's the operational side of the business. If you weren't in the business tomorrow, clearly you are doing key things within the business. What would happen then? How would the business continue to run? But also you need to think about the financial implications as well. If you are key to your business and say your business is borrowing £250,000 to £500,000, the business clearly still has to continue paying that debt. So Keyman Insurance is going to cover two risks within your business. The policy will obviously pay out should you die. When you die, the business gets a lump sum as per the policy. Now, the business can do one of two things with that lump sum. Number one, it can take that cash and go out and hire somebody else to replace you. It therefore takes the pressure off the business if you're not around. Secondly, you can also take an element of the money to pay down debt, therefore taking more pressure off the business, giving your remaining partners or co-directors time in order to plan how to fill the gap. Now, Keyman Insurance, many years ago when I started out in banking, used to be a mandatory thing. If you're taking out borrowing, you really had to take out insurance cover. It's less so now. However, it really makes good sense to get an insurance cover limit to make sure that the business is safe and sound should you no longer be there. If you want to have a look at Keyman Insurance cover, just go and check out your local independent financial advisor. Go and check the business colleagues. I'm sure many of them will have dealt previously with financial advisors who will be able to sort out this important insurance product for you. Well, that's it for another bulletin. As ever, I hope you enjoyed it. If you did, please don't forget to give it a like and a share. It all helps. So that's it for this bulletin. Thanks very much for being with me. Look forward to being with you again next time. Bye-bye now.